Oil prices edged higher on Tuesday after a sharp drop in the previous session, as markets reacted to cautious optimism over US-Iran peace talks and shifting expectations around crude flows through the Strait of Hormuz. Brent crude rose 24 cents, or 0.38%, to $78.15 a barrel, while US West Texas Intermediate gained 33 cents, or 0.46%, to $74.19. The rebound followed a more than 3% slide on Monday after the United States granted Iran a 60-day sanctions waiver following early-stage negotiations. Sentiment was also influenced by reports of reduced hostilities in Lebanon under the broader understanding linked to the talks. Despite the rebound, traders remain wary. Analysts say markets are still weighing whether the diplomatic progress between Washington and Tehran can hold, particularly given long-standing tensions over maritime security in the Strait of Hormuz, a key route for global oil shipments. Market analyst Tim Water of KCM Trade said investors remain skeptical, pointing to deep mistrust between the two sides. He noted that a return to pre-conflict oil price levels is likely to take time rather than happen quickly. US President Donald Trump said Iran would agree to inspections to ensure what he called nuclear honesty. He also warned that Washington would respond if Tehran failed to uphold its commitments. Shipping data suggested some recovery in activity through the Strait of Hormuz, with 2 crude tankers carrying nearly 2 million barrels of oil passing through on Monday after weaker traffic over the weekend. However, overall flows remain below pre-conflict levels. In Washington, energy data showed U.S. crude inventories in the Strategic Petroleum Reserve have fallen to 331.2 million barrels, the lowest level since 1983, reflecting tighter supply conditions in recent months. At the same time, U.S. fuel prices have continued to ease. Data from GasBuddy shows the national average gasoline price has fallen for 6 consecutive weeks to $3.85 per gallon, about 15% below its May peak. Prices declined across most states, including sharp drops in Colorado, Arizona, and Ohio. Analysts say the decline could help ease inflation pressures and provide political relief ahead of upcoming elections, though they caution the trend may not last. Patrick DeHaan of GasBuddy said prices remain sensitive to developments in US-Iran relations and supply risks. Additional uncertainty comes from refinery disruptions in the United States. TotalEnergies has shut its 238,000 barrel per day Port Arthur refinery after a lightning strike caused a power outage, with restart efforts expected within a week. Meanwhile, a fire at Marathon Petroleum's Galveston Bay refinery in Texas City has added further pressure on supply outlooks. Looking ahead, analysts warn that risks remain tied to geopolitical tensions, refinery outages, and the Atlantic hurricane season, any of which could quickly reverse recent declines in fuel prices.